Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Thursday, July 21st, 6:16 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Bitcoin's down 3%. Oil's down 4%. Equities were down when I got to my desk early this morning, but they've clawed their way back and pretty much flatlining. The usual macro things on Thursday, we got jobless claims and nat gas inventories. Nothing much else on the board. You can get the full listing on the website where the economic calendar and the earnings calendar are. Earnings today, before the bell: American Airlines, Nucor, Dow, D.R. Horton, Home Builder, and Domino's were the big ones this morning. This afternoon, we got Snap, and I will tell you, I don't know if I'll get to the chart, but there is a big gap above in Snap. I got an alarm on it yesterday, but since earnings are today, I didn't take the trade. But you may want to look at that Snap chart if you want to get involved. There is a large gap above price right now. Seagate and PPG in the industrial sector after the bell. So let's dive right into the charts. Bitcoin, we were talking about this level at 24,000 on the daily chart as being an important level. There's like a $4,000 it's not a gap, but a thin zone in the volume over price profile on the daily chart. You can see that we had a nice rising channel on the 60-minute chart, got up to the top and was rejected last night. I think some of that's due to when Tesla reported, they disclosed that they sold 75% of their Bitcoin. Obviously, they didn't sell it right then to make it go down, but I guess sentiment maybe weighed on it a little bit. I don't know. But what I do know, if you're interested in Bitcoin, you've got some very clear levels here. One right at 24,000. If you want to alarm that for a breakout, your target would be 28,000. And if this checks down to the midpoint of the channel, or even down towards 21,750, you've got some really nice support along that line at like I said, 21,750, where you could get an objective long there. Our oscillators have shot up to our 60 level, so we've got to have we got to sit up a little taller in the chair and be aware of where these oscillators are. If you're a part of our group, you know that I regularly send out notices: roll and protect, roll and protect. If you've got stuff that you've got, your options have gone deep in the money, or you have nice wins on, I like to roll that stuff up in these situations. Now we have another factor that contributes to that. Number one, the primary trend in the markets are down. So until something dramatically changes, we can characterize what's been happening in the market as a bear market rally. And you never trust a bear market rally. And we've got the Fed next Wednesday. And now we've got overbought conditions on the oscillators. Now, I'm not willing to go, gonzo short, but I sure don't want to sit in stuff that I've got deep in the money that I have paper profits on. I want to see if this rally can extend, but with the knowledge that I've already taken a lot of those profits to the bank. So I recommend the same in your trading. Don't become complacent here because of the nice little run we've had. Same here too on the NAMO oscillator for the NASDAQ up here at 60. That's a yellow flag. I mentioned oil was down 3 or 4% this morning. I think a lot of that is due to the futures contract roll that just happened. When you, on most charting platforms, they're going to show you the continuous contract for oil and a lot of the futures market. But oil has futures contracts for each month, and each month they roll off. So the August contract is moving to the September contract now, as these futures roll on a regular basis. And so the condition in the oil market is what they call super backwardation, and there's basically two conditions in options market. Contango is when the front month is cheaper than the back month, and backwardation is exactly the opposite, when the front month is more expensive than the back month. So let's just take a contract. Let's say the September or let's say the August contract is $100 for oil, and the September contract is $96. That's backwardation. So when you roll from the August to the September, you're rolling from 100 down to 96, and then on your screens you got, oh my God, oil's down 4%. What's going on? Well, the only thing that went on was the futures contract rolled. There's no real change in the physical market, and I think that's a lot of what we're seeing this morning. So the oil market remains very tight. I remain, a bull on energy in general. Yes, we've got to trade the charts, and we've got to respect levels, but in general, the supply situation has not changed one iota since this whole thing started. And just as a side note, the Nord Stream 1 pipeline into Germany was turned back on today after the maintenance period, but at that 40% capacity level, which was the same level that it was prior to maintenance. So back to the status quo. I'm sure people in Germany are, have a relative sigh of relief that Putin hasn't completely shut it off, but time will tell if he intends to play that card at a different time. So let's dive into our index charts. SPY continues to make progress. Not a ton yesterday, but it did what it had to do. We have broken above the 50, and now we are sitting right at a more or less, is it a $4 gap or a $5 gap? Anyways, we're right at the gap entry. We've broken the downtrend line on the daily. PPO continues to rise, which is what you want, and RSI has broken into the bullish regime after having been below for quite a long time. Let's look at the 60-minute chart. We can get a little bit better resolution. Yeah, the gap was 394.20 up to 399.50. So we're just inside it, maybe a little bit below or a little bit above this morning on the open, depending on where this thing toggles to. What I would say is, in your trading, we've definitely got two lines to shoot against. Let me just go back. The 50 EMA is at, let's call it 393. And we've got this line of support here between 392 and 390. So when you're looking at, say there's some kind of pullback, what you want to have happen is you want to have 390 hold. I mean, that's our big line in the sand with our volume over price bar. And we've had all these support, resistance here, but those should be support on the way down. So if price manages to drop below the 50 EMA at 393 and manages to drop below 390, that should raise some real concerns. And so that would be a support level that I would certainly have highlighted in the charts. Now, from a technical standpoint, while price is here, I'm kind of the mindset they want to at least have one more push, get up and tag 4,400 on SPY, fill that gap, take that off the technical checklist, and then if they want to reverse it, they can go from there. So we're at an interesting juncture here, and we're kind of in a dead zone for information. We've got the Fed next Wednesday, silent period ahead of that, and then we just have earnings, and I'll have to look at next week's calendar, but then we've got the big catalyst of mega cap tech rolling in. So void of bad news, maybe SPY can move up here and fill that gap. Qs, nice move away from the 50. Now we are back up challenging this 304, 305 line right here where we had all this consolidating action before the bottom dropped out. So we're kind of at an important point on the Qs as well. If it can break through, then we've got a chance to move up to 310, fill this little gap, and possibly even up towards this 317 area that's been a sticking point for a long time back into the spring. On your trading, what I would be doing is just, it appears to me that, with the 50, and we've got this line of support here at 295, that should be a very solid line of support on any pullback. And here you see right up here at the 305 level is where we had this consolidation in the past, may pose an area of resistance. So if we come up here and spend a little time, I wouldn't be that concerned, because that we have got a high volume over price bar there, quite a bit of price action. So the bulls are going to have to gather some energy. I wouldn't expect them to just waltz right through that like it wasn't even there. So here you've got the old gap that's been filled, and this line of support here along 296 that lines up real well with the 50 EMA on the daily. I wouldn't want to see price fall back into this trading zone. Otherwise, I would expect it to come down, at least down to this trend line at 290, and you don't want to be holding a ton of longs if we get that $10 pullback. IWM, great day, 1.6% right up here to this gap. You can see that we've taken out the 50, we've taken out this intermediate downtrend line. We've got a really nice line of support at 178. On any kind of pullback, I want to see 178 hold. But as it stands now, there's an open door to fill this gap and move up towards 186, 187 with this high volume bar here and mega resistance back here where we had the old trading range, and where you can see that this run ultimately died right here, right where this big resistance comes in line. So I think there's definitely a path up to 187. It gets harder after that. Here you can see the resolution on the gap we've got. I've got a little intermediate support here at 180 where this pullback was. If this thing comes back and loses 180, then I would imagine it comes into 178 and possibly even 176. I wouldn't want to see it drop any lower than that. Facebook's been on a run. 4%. We talked about yesterday. Well, we've been talking about it for a while, but we talked about yesterday that clearing the 50 was important. In morning trade, there was a chance that we opened with a gap up, and then second candle, there was a pretty good reach down towards, we didn't get there. What was the low? Yeah, 176.70. We reached down below, but then when we came up through the 50, that was a big buying signal. So you could have gotten long there like we discussed. I think there's a little resistance here at 184.50, and then I'd be targeting this big value zone up here at 189. As far as support goes, I mean, we have had a pretty extended and uncorrected run. We had a little correction here, wasn't much. I wouldn't be shocked if this thing came back to the 50 or even back to 172. I would not want to see it come back and lose this big line of resistance that it had so much trouble getting through. That 172 would be a big line in the sand. And remember, if this breaks out and then comes back to lose 172 back in this trading range, then it becomes a short because your target is the bottom of the range back at 156. So always keep that in mind, because then that would make this look like a fake breakout, false breakout, bull trap if this thing were to come up and then come back and lose 172. Don't expect that to happen, anytime soon. But just remember, we're extended on the oscillators, and this move has been pretty much uncorrected. So it's like any day in the market, you got to stay on your toes, know your levels, and be ready to react to them. Apple up $2, 1.35%. The major accomplishment yesterday was taking out the 200, and so Apple remains one of the strongest stocks in the market. It's a leading indicator. You're not going to find that many stocks over their 200. I mean, we just talked about Facebook. It just crossed its 50. So that just tells you in relative terms how much farther ahead Apple is compared to, a Facebook or really a lot of other technology stocks. And you can see that once it made that move, it just kind of hovered here at 153, 153.50. So I think, making a long story short, I think you can be long Apple against the 200 at 152. And that is a big level. I would be concerned if Apple, loses the 200 and then starts coming down. You may see a run to the bottom of the channel at 147. Tesla has been erratic after earnings last night. I think the line to watch is 750. I added a intermediate trend line off of this 690 low. We've made a series of higher lows. We have not come back to this big trend line yet. If we were to pop out this morning from 750, I'd be looking for 760 and then completion of this gap fill up at 775. I would become concerned if we lost this uptrend here at, say, 730, whatever, 735, wherever it comes in. Then I think you'd come to 720. And that's a very important line. As you can see, all this resistance. We've got a big value zone here. You get below 720, then that opens up 700 and 690 and all that. When I looked pre-market, it seemed, kind of stable after the volatility, but you never know with the aftermarket whether that's gonna hold when the big players hit the tape at 9:30. So just be aware of your levels if you've been actively trading Tesla. Right here on Microsoft, I've dropped in an intermediate trend line. You can see we've come up, pulled back, extend, pull back. Now I think a big level right here. We've got a large volume over price resistance level. It's going to be important to clear this 263.50, and then if we can do that, your target is going to be 268 at the top of the range, and then that's going to be the mega test because it got rejected the last two times. Amazon has been going blue origin, just absolutely firing out of the hole. We had come up here, we had talked about this ascending triangle that we had forming. We had a run off the lows to 117, came all the way back up to 17, forming that coil, back down to trendline support. One last run at 117 where it failed, pulled back, and then blasted off. So that 117 opened the door to 120, and then look where it hit a brick wall yesterday at 123. Not a coincidence. It's where the high volume overpriced bar is. So for today, 123 is clear resistance. If it can break that, it opens the door up towards 125, 126, and then ultimately 128.5, where the prior high was. So on a pullback, I wouldn't be shocked if it came in to 120, like it did here, in relative terms. You can put your Fibonacci retracement tool from the low to the high, see where that 38% fib level comes in, where the 50% comes in, and that'll give you rough areas to look for support on any kind of pullback. And very much like the Facebook example, let's just say the whole thing falls apart. So we break out from this 117. We come up here, we dribble down, and come back into 117 and lose it. That's a beautiful line to short against because that was key resistance on the way up, should be key support on the way down. If it fails there, would not be good. Then you'd kind of open the door back down to these lows at 102. You know, if the whole thing is falling apart. Short of that, though, if Amazon goes up here and then comes back to 117 and it holds, that's your breakout, back test, and then go. So several scenarios to think about there. But you've definitely got the levels at hand, so you can trade around them. Google really didn't do anything yesterday, just kind of stay put. I think 114 is still your pivot, and you're looking for 116.50 on the upside. Downside, you've got a large volume over price bar here and kind of a support zone between 112 and 111. So any kind of pullback I would expect would be contained by this level here, give you an objective long, but 114 is your pivot. Netflix made good progress after its earnings. This is the daily chart. We talked yesterday about the $40 wide base consolidation. Now we have broke out. We have recaptured the 50. We are on our way, and anything short of dropping back below the 50 back into this trading range, your target is 245, and that comes from adding the $40 trading range to the top of the range at 205, gives you 245, and that lines up really well with the open gap above. So Netflix is making some good progress. SMH daily been on a rocket ship from the bottom of the channel to the top of the channel. We have taken out the 50. We are right here at the top. I mean, honestly, a beautiful place for it to get rejected. The objective trade is to short it against 228, 230, but you may want to get a little bit of evidence of that first rather than, it's certainly an objective trade. You were rejected back here at the top of the channel. You've been getting rejected at the top of the channel for all of 2022. And, to say now it's different, that's kind of a stretch. So, that is an objective trade to short it there. What I would rather see you do, if you've been long, this is certainly a place where you either got to trim or you got to take it off. We're still in Micron. A lot of you are in AMD and NVIDIA. You got to have your antenna up right here because you're at the top of the channel. Now, if price were to break out here and break outside the channel, then you could really get some rocket fuel to come up to tag the 200 up near 245. So really critical spot on SMH and the semiconductor names. ARC FinTech, talked about this one, set to break out, having recaptured the 50. If it can clear this last line of resistance, I see it going, or at least technically open, to 23. Genomics had broken out in the morning. I think I sent a note out about that. Came right back to 38. I think above 38, the door is open to 43 with a void in the charts that would be helping. Flagship fund right here at downtrend resistance. Anything over 47.50, I think the door is open to 52.50, and then 57. You've got a ton of support here at 45 as well. You've got all the moving averages along with technical support along that line at 45. ARC Web, if it can break above this 59 here, then you've got a void in the chart. I think you'd be open to 67. Taking a look at Micron, it's kind of been dogging it. I think we kind of had the wrong one. I mean, we had the technical setup. That's fine. But AMD and NVIDIA have definitely had the horsepower versus Micron. Where, I mean, we made progress up 1.5%. Can't, complain too much. But we're stuck here at the 50, and we got SMH at the top of the channel. So, maybe we can power through and get to our 66 target. That certainly would be nice. Lowe's is making good progress. I think, I'm looking for, 197 and possibly 207 at the top of the range. We'll see if it has enough horsepower to do that. But we've got all the fast moving averages pointed up, and we've taken out the 50, so that's positive. Goldman keeps going. It's going to get a little tougher here at the 200. Where's that at? 329. I would certainly be, rolling this up as you go, and not, become too complacent with it. I mean, strong chart, strong breakout, took out long time downtrend resistance, and all the fast moving averages. So this looks destined for a touch of this resistance level at like 327 with the 200 just above. We had a technical alarm yesterday. I had sent out either earlier this week or last week about SHAK. We've got a massive void in the chart. We talked about getting long on a breakout above 47.5. If you alarm that in your chart or in your system from when that went out, you either took that trade or you didn't. But I will note that there was a prior high right here where it closed at 49. So if you wanted to take another bite at the apple, or if you missed the first bite, here's a second chance, because I don't think it's going to be dramatic technical resistance, but there is technical resistance right here at 49. And if it breaks that, it's definitely got a lot of room to run up towards technical resistance at technical and downtrend resistance at 60. And you've also got the declining 200 coming in there. So that would be, from a technical standpoint, a nice technical target for price to shoot for. And I'm just going to quickly put up SBUX. We're in this one coming off of the double bottom low with bullish divergence. We're making our right side of the W. Here's the left side, middle, and right side of the W. If we can get up to 88 at the 200 and kind of get back up to this level, that would make that W formation complete, and technical target of the 200 EMA being tagged. That would be a logical place for at least a technical reaction on price. Now, we got in, somewhat below or right around 80, and we rolled up to 83 yesterday afternoon. So we did take a trip to the bank, and now we're pretty much at even money. So obviously hoping for this thing to complete so we can have some winning trades on that particular ticker, but looks good so far. So let's see how it goes today. I think the most important thing is to sit up taller in the chair now. We've had a run. The oscillators are up, starting to tickle, overbought, and we don't want to be complacent. Certainly, if you're lucky enough or good enough to have been in some winners, make sure you go to the bank. Paper profits do you no good on a pullback. So it'd be nice to have a lot of those gains in the bank. I still think you want to stay long, but at even money, not deep in the money. So if you're new here, thank you so much for the time. If you like technical analysis, if you like a game plan heading into the day with objective levels to chart, along with a lot of trade ideas, hit the subscribe button, hit the alarm bell, leave me a comment of what you want to see. Jump over in the show notes. You'll see a link to the blog site where you can add your email address and get all my content morning, noon, or night. That would be great. You'll also get an invite to the trading room where you can interact with the rest of the guys and girls that are all working hard trying to get better. So let's leave it there. For the regulars, thank you so much for continuing to support me. I really appreciate it. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.